We're half an hour away from the Opens in Hong Kong, Shenzhen, Shanghai. You're watching the China Show. I'm Annabelle Droulers with David Ingles.
Good morning. Let's get to your top stories today. We're looking at shares of Nissan surging in extremely heavy volumes in Tokyo. Honda is under pressure, as you can see here on news, that they are exploring this potential merger, which actually could create a singular rival to Toyota and really help them compete with global peers.
At the same time, you've got investors that are bracing for the Fed's last rate decision of the year with a cut widely expected. But the big question, policy signals, what are they going to be for 2025?
And the Chinese President Xi Jinping urging officials to scientifically plan economic work and seek a good start to the coming year. Beijing reportedly planning a growth target of about 5% and a higher budget deficit target.
You know what, Dave, I feel very excited about the market action today, but actually when I take a look just now, I see that, you know what, it's fairly steady in the session so far. There's a couple of stories we're watching, of course, and that's really bringing all the action. It's that Honda-Nissan, a potential merger that's very much in focus. We can get the market reaction in just a moment. But also there's just what's coming up ahead. And yes, you do see Chinese futures looking a little bit high, so they could actually be sort of the counterweight to US stocks that pull back overnight. But a lot of moves also coming through in the currency space. Dollar steady right now, but overnight we did see some moves against the Japanese yen, the Brazilian real, also the Canadian dollar. What's happening is in the Asian dollar space, you're seeing a couple of different things being expressed. Let's take a look at what's happening with Asian currencies, the Bloomberg Asian dollar gauge, because you're actually seeing it sliding now to what is a 2-year low. Now, think about what's in this basket. Okay, so the two things that make up the most, it's the Chinese yuan, the Korean won. I think we know very much the dynamics of both of those currencies. But just to reiterate, political turmoil in Korea, concerns around really the health of that stock market as well. You are seeing foreign investors that are leaving. It puts pressure on the local currency. And also, of course, the Chinese yuan, these concerns not just about China's domestic economy, but also that tariff risk and what happens with Donald Trump back in the White House next year. You have really seen that dollar strength coming through on these expectations around the Fed, even if we don't really have too much clarity, again, what will happen with those policy clues for next year. Still, though, the dollar gauge also, when it comes to China's issues in the economy, when I talk about that tariff risk, that also kind of plays out in the key strength that we see in certain sectors. And EVs, of course, really stands out. Let's take a look, because today you're also seeing sort of that second order effect and how it is actually having a huge bearing on other countries' automaking industries, and really Japan, that perception perhaps that it really was a little bit too slow to the EV race. They focused more on the hybrid story instead, and today perhaps some consolidation. Honda, Nissan, maybe Mitsubishi perhaps could be added at a later point, that counterweight to really the strength of Toyota in that market as well.
Yeah, Bill, let's get the details right now on this story that, you know, could actually create, to your point, that really a singular force to be reckoned with as far as the domestic story is concerned, and then they can worry about competing globally, right? Nissan shares, as we were pointing out, up 20%. You're also getting some of the South Korean automakers also seeing some material gains going into the session today. As we mentioned, volumes are absolutely exploding in Tokyo. Nicholas Takahashi, our transport reporter, is joining us out of Tokyo today. So Nicholas, where are we on this story? Get us up to speed.
Well, many questions remain. It's not clear what and when and what shape the partnership will form. We're not sure if it's a merger, production will be overlapped, or if it's a capital tie-up. We've had an executive tell us that they're also considering the option of a holding company, which would strengthen Honda's stake as well. So the questions definitely outnumber the answers, but as you said, this is kind of an interesting way for the story to unfold in Japan. Essentially, if Honda forms a partnership with Nissan and potentially Mitsubishi Motor, beyond the alliances it's had in the past, this would effectively split the Japanese auto industry into two. The Honda camp with Nissan and Mitsubishi, and then Toyota with Subaru, Mazda, and Suzuki. While Honda and Nissan's production pale in comparison to that of Toyota, this would spell a lot of interesting implications for their global competitiveness as well in regards to hybrids in North America and EVs in China.
I want to talk about the market reaction because I think it's quite clear there today. You've got obviously Honda that's under pressure. investors really like this for Nissan and Mitsubishi in particular. Why are we seeing that divergence, and what's in it for each of the car makers?
That's another interesting point as well. For Nissan, the benefits are pretty obvious. The company's been in a lot of financial trouble recently. Poor profit during the last quarter and over the last year or so in the U.S. and China forced the company to lay off thousands of workers, pare back production capacity, and lower its annual fiscal outlook for the current period. For Honda, the answers aren't so clear. Whether Nissan will help bolster its production in North America remains to be seen. It all really depends on how the partnership shakes out. But that's I think, one of the big questions moving forward.
Nicholas, and I know you may likely not have an answer to this, and I think to your point, you make a very important distinction here that we still don't know in what form, if this does push through. But I guess what I want to understand is, because these are domestic giants in Japan, and I'm wondering if we get to a point where there is some form of a merger here, I wonder if you could give us a sense of what potentially the regulatory hurdles that we'll need to talk about at that point in time, Nicholas.
Yeah, that's another interesting point, and we're getting into sort of gray area speculation. The talk of a Honda-Nissan merger isn't necessarily new. This has been happening for some years now, as we see the general decline of Japanese car makers in North America and China, least of all with the advent of EVs, as you know. But with the Honda-Nissan merger, there has been speculation that the government would push for this in a time of great weakness for Nissan. There was speculation about Renault stepping in, but Japanese car makers have been struggling on a lot of fronts, and for the country to lose a company like Nissan on such short notice would be a real hit to the economy. Honda recently pared back its partnership with GM. Nissan is just finalizing its loosening of ties with Renault as well. And so while the Honda and Nissan alliance would spell a lot of bolstered output abroad, it remains to be seen sort of what dynamics are the main motivation for this.
Nicholas Takahashi there and the team in Tokyo, our transport reporter. I can imagine how busy it is right now there in the newsroom. Also out of Tokyo here, we're getting instant reaction here on this potential, and again, we have to underscore this potential marriage, and we don't know in what form this marriage is going to come. But, Belle, yeah, our guys at Bloomberg Intelligence have come out and talked about how it might actually make sense from a sort of financial capacity perspective.
Well, I think it makes sense, particularly, it seems, for Honda in this situation, or rather Nissan, given they've actually faced more significant financial pressures. Of course, they had such a big alliance with Renault for so many years, but that has obviously been peeled back with Carlos Ghosn out of the question or out of the picture now. Honda, though, we're hearing from industry analysts, actually their near-term upside could be a little bit limited, it seems.
And yeah, and I think it's important too, you're right. And the reason also that Mitsubishi is perhaps on the market reaction that we're seeing here, a lot more upside than the others, is that adding Mitsubishi to the equation actually then might create a greater competitive wall, or moats, as our BI folks have to say, against the domestic and incumbent, which is Toyota. In fact, just very quickly here, just for context, right? The capex that Toyota puts in place dwarfs almost everything that we see in Japan combined. So I think that's the sort of giant they have to sort of take on before we can talk about how they're able to then compete longer term with some of the Chinese rivals there.
Well, I think actually if you were to take a look at the Japanese automakers generally over the past 5 years, say in the Chinese market in particular, where obviously it's the world's biggest auto market and they've faced a lot of challenges there, Toyota is holding up the best in that market. Yeah. Actually, the ones that have lost the most ground are Honda and Nissan. So you just sort of question how much is that playing into what we're seeing today, that need for consolidation.
Yeah, we'll see market reaction, of course, to this story, if any, in 20 minutes' time. In 10 minutes, we'll get the pre-markets, of course, coming through here in Hong Kong with some of your Chinese car makers coming through. That's one pocket of the market to watch. Yeah, but just ahead, we're talking all things economics here as far as China goes.
Yeah, we've got Bank of America Global Research joining us next, talking about where China's economy is heading. We had the recent policy shifts as well. JPMorgan Asset Management also going to be talking Asian equities. Don't just focus on that US exceptionalism story. Maybe there's also a play here for 2025. We're counting down to the open of trade in Shanghai, Shenzhen, Hong Kong. We do see actually futures pointing to some modest gains, at least for the Hang Seng in the session. As we said, 20 minutes until the open. This is the China Show.
Wednesday, the Fed decides.
The consensus seems to be that you need a beat on payrolls, an upside surprise on CPI, and the Federal Reserve will hit pause.
Yeah, but it's pretty high bar.
All this seems very predictable.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
People feel good about where the economy is. Demand is obviously pretty strong.
If there were black clouds on the horizon, what would they be?
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
We're just 17 minutes away from the opening bell, and the president is actually starting his, I think, 3-day trip to Macau today. So we're watching that and some of the sectors involved. Casinos, we've been watching that since news broke, of course, in the weekend of that trip. Chips, autos and auto parts because of the looming or the brewing story that's taking place over in Tokyo. We're still in the window, I think, for the one-year lending rates. The fix of the day should be out in about just under 2 minutes from now. I think the spread to the estimates yesterday was, 900 pips or something? We'll get more details on that in a moment. The stock slump and I think the pullback we're seeing in particular in Shenzhen and also the Chinex index is also key today.
What did come out, though, yesterday after the bell was these reporting lines around where the deficit is going to sit for next year. And maybe we get up to 4%. That's, I think, what Reuters was saying. But certainly that is the major focus of Chinese state media today on the papers, taking a look at, for instance, President Xi Jinping's remarks on the economy. That's really front and center. State media outlets talking about his call for officials to so-called scientifically plan economic work and as well seek a good start to 2025. That's as Beijing reportedly eyes, as I said, a growth target of about 5% for next year, so pretty much in line with this year's one, but also raising the budget deficit to 4% of GDP. Now, Xi made the remarks during a visit to the southern province of Hainan. He also urged for free trade port development. He called tourism development, scientific innovation. They are the key priorities we're hearing for the island.
Yeah, scientific, I think it's the first time we've said scientific 3 times already, and we're barely 15 minutes into the show. The reason I say that is because sometimes economics is an art, and sometimes you really got to put the incentives in place for people to then spend and become the economic agents that they should be. And Helen Qiao is with us right now, Chief Greater China Economist at BofA Global Research. The reason I bring up incentives is because you guys are big on that. August 12 report, you repeat that phrase in your latest report on the back of that Central Economic Work Conference. What's changed for you?
I think the key is not necessarily any announcement numerically talking about the growth target or fiscal deficit. I think those are important information that the investors are looking for. However, I would say that, as you said, David, the economic planning could be more as a kind of art at this point, especially when it comes down to the incentives. We think that CEWC and also the Politburo meeting just 2 days before that were precisely giving us for the first time some clues about how to plan for 2025 more scientifically or artfully. At the moment, we think that this is the first time they've mentioned to restore the positive incentives for the party members, and especially referring to the local government officials and officials at the central government as well. And we think that is actually key because, nobody works well when there's no upside, right? We only behave better and work better when we are having both the carrots and the sticks. If we only have sticks and no carrots, nobody is going to perform well. So we think that is actually a very strong change that we saw in the recent past. And along with that, it also mentioned the measures measures to curb the negative incentives, or we call it disincentives. For example, they mentioned how to actually better regulate the legal actions against the private companies at the CEWC. So this is referring to those profit-seeking law enforcement that local governments recently were involved in. And also it mentioned some disciplinary actions and also reforms to the anti-corruption government agencies. So these are all the changes that we saw that are pretty positive in our view, and we think matter more than just the numbers.
You mentioned the anti-graft crackdown, and that has sort of been emblematic of what we can see expressed among government officials who are just too concerned about doing the wrong thing. Even if you put the carrots in place and you talk about reintroducing incentives, do you think people are actually going to respond to that?
It would take time, because at the very beginning, people would think that, well, that's probably just a trick, right? Because there's no credibility in setting that up yet. But you need to reinforce it through the KPI setting and everything so that people will believe that this is a positive incentive. So that at the time that you curb the disincentives and strengthen the positive incentives, people will over time, through repeated games, figure out that this is going to work and we should keep doing more of what you want me to do. So that, I think, is the key that is missing in the countercyclical policy adjustment in the recent past, in the previous 3 years. But going forward, we see a positive change and high probability that this may come back.
Yeah, and maybe just to pick up on that before we talk about the consumer, have they done enough to say, so the incentives are there, do they have now the tools and capacity to carry out sort of pro-growth plans? Have they unlocked the fiscal bottlenecks across local governments, for example, do you think?
Well, there are too many things, David, in one bottle. I would say that they have to do it one at a time. But at the moment, I think the government is clearly laser focusing on one thing, which is local government, liquidity problems. That at the moment is also pretty crucial related to the company profitability issues or liquidity issues at a private company levels, and as well as the income that is curbed by the income growth that is curbed by the expenditure cut. So if we actually see more actions from Ministry of Finance as well as from NPC Standing Committee, allowing the local governments to borrow more and give them more liquidity, that will allow them to resume the role that they are playing, which used to be very crucial in promoting, local economic activities. At the same time, they can also shoulder more social responsibilities, so that actually social stability-wise, we can also see some benefit. So I think that is number one task that they are currently being designated for. The second one thing I think is about the promoting consumption. But for consumption, I think at the moment, we're not seeing the actions going towards a helicopter dropping money to everyone. Cash distribution is not necessarily any time the priority for the government yet. But how to actually get people to spend more, I think the key at the moment is actually for people to believe that they are going to earn more in the future, i.e. not only their income for the current time has to be stable and hopefully positive in growth, but also hopefully that they see this positive growth continue going forward. In other words, if you are going to give out money, you have to keep giving money, which is very unlikely, right? So you'd better create jobs, and so that, at those jobs, they can get paid more and more. So those type of expectations are very important to come back. We think this is more important than, for example, the short-term gains.
It does really seem like you've got to have that perception change, and I think to your point, it comes back to that confidence you feel in your local community, and are you actually prepared to go out and spend? But what are you seeing at the local level then? Is there any green shoots of people actually feeling a little bit more optimistic right now, or you think it's still that just broader concern around the health of the economy, tariff risk as well ahead?
Right, and just to interject there as well, I mean, the retail sales number we got recently didn't really exude that message.
Confidence,
still. Yeah.
No.
Yeah, well, from our consumer survey, that proprietary survey that we do on a monthly basis in China, we're seeing that the Chinese consumers are actually still kind of wavering on the confidence side. They're still worried about their income going forward. They don't want to, they're not planning to spend more. But actually, we're seeing some positive changes, which is, for example, in areas such as going abroad to travel. I guess this is because the Golden Week and vacation time is coming.
Right.
And people are thinking about, going overseas to spend again. So that is still happening. At the same time, we also think that the temporary blip, or let's say, not exactly too bad a number, just relative to expectation. I think November was quite a disappointment, mainly because that I think we are seeing a big of a shock coming from the internet kind of e-business platform sales. This is because if you look at Beijing and Shanghai, these kind of tier 1 city sales, retail sales recently, their numbers were, double-digit negative growth. So contraction at this level can only be explained by one thing, which is we're seeing too much of the concentration of the internet-related sales coming into tier 1 cities, because that's how retail sales in China are registered. All these sales go to the cities where the headquarters of those companies are registered. For example, PDD, and also Taobao and also JD, they are registered only in tier 1, tier 2 cities, and only those cities would get the sales, and out of the whole nation. So the very fact that we think retail sales was probably affected in October because it was front-loaded into October and boosted the numbers actually hurt in November. And therefore, we think that probably that can explain away some of the negative numbers that we saw in November. But going forward, we think that we probably can see a bit better kind of numbers helped by the Chinese New Year coming and by the end of the year. So we probably can see some improvement in December again.
There we go. And hopefully by that time I can pronounce it properly, because I think I've been saying it wrong all year. I've been saying BofA, but apparently it's BofA. I'll learn how to do it. Happy New Year to you, and I'll see you in the new year.
Yeah.
There we go.
Got there in the end. Maybe I got there in the end too. All right, well, that was Helen Qiao joining us this morning, Chief Greater China Economist at BofA.
Nailed it.
Global Research.
Yeah.
All right, just a few minutes out from the open here, we've got futures pointing to some upside. Not really, I guess, a counterweight to what we had on Wall Street overnight. We'll have plenty more ahead. The one reference rate is there as well. This is Bloomberg.
All right, going into the Wednesday session here, it looks like there is some tailwinds coming through, plural, looking at some of the benchmarks. We are, though, on a 3-day modest skid, if you take that in aggregate. But yeah, I mean, we're up about 1%, so you are getting some buying coming through. In the early goings of Wednesday, we're looking at consumer stocks in closer detail here.
Yeah, well, we were just showing that chart earlier about Chinese households that keep on saving, but actually we do have some upgrades to some consumer names as well in the session today. Dairy stocks, for instance, travel stocks. Yeah, so maybe some improvement there. New buy outperform new ad. I mean, that's all positive for those names.
Yeah, absolutely. So we're looking at that. We're looking at, and speaking of consumer as well, so the autos are going to be very much in focus. So obviously some big gains in Japan, some gains to note over in South Korea. And look at how some of these Chinese names might be reacting on the back of, I'm not sure if this is purely the Toyota story, if at all, or this rebound we're seeing across the region. We'll unpack it, but certainly they are outperforming the benchmark in the early goings. The open is next.
Welcome back. You're watching The China Show. We are counting down to the open of markets. Just under a minute's time from now, we've got futures that are pointing to some gains here. Of course, a lot of event risk on the horizon. You've got a lot of central bank decisions. You've got this possibility of the US investigating semiconductors. So, I mean, there's headwinds, Dave, at the same time, but green today.
Agreed today, and that might be on the back of a softer dollar, I think, to your point, in the central bank and the macro conversation. Let me see if I remember. It's a long list of central banks, isn't it? So you have the Bank of Thailand, Bank Indonesia. This is over the next 3 days. Banco Central of the Philippines. You have the Fed, you have the BOJ, you have Taiwan also coming out. I'm not sure if that's a complete list. Oh, we have the LPR coming out as well, don't we, out of China. How can we forget the China show, the China Open, looking like this. After 3 days of declines that we're seeing, mostly, that's more a Hong Kong story. We did see a bit of a pickup, right, on the onshore markets yesterday. 0.4% to the upside. Within this space, we're looking at some of the autos, of course, and some big moves coming through in the pre-markets. Maybe on the back of the Nissan, Honda, maybe Mitsubishi story. The 10-year yield currently right now is unchanged in the early goings of Wednesday. We are getting a little bit of upside pressure on price on the 30-year yield. As you can see, if you're just joining us after the first time in several weeks, we have taken out the 2% handle as far as that is concerned. A couple of the markets, specific benchmarks we're looking at. This is one. I think we pulled back over 2% yesterday, and in the early goings, we're already losing some steam right now. The 50-day moving average on this and the China X index, which we'll show you later on, not here on the dashboard. Flip the boards, please. Also taking out and closing below that level yesterday. Right. 3-day decline. We're snapping that. Again, we're closing in back again on the 20,000 handle. 10 cent, 9 cents, and 1% to the upside. We showed you that graphic earlier on, bottom of the screens, is that within the Hong Kong markets, we're looking at Macau casino shares. The president begins his 3-day visit to Macau today. I think one of the things that's come out so far as media is concerned is, extending public housing on the back of those calls coming out of Beijing. The Nikkei, of course, will break, and we'll tell you all about the Macau story once we have more details on that. But there's only one story in town today, and that's really this, looming marriage, and we'll see what happens with that. That's taking place in Japan. The automakers in China, BYD, Great Wall, SAIC, Geely, not in that order, but all on your screens on your board. Here we go, bucking the trend. We are outperforming, of course. So this, Bell, is, of course, the story, and obviously what's been taking place in Tokyo today.
Well, it's really that consolidation drive that we're seeing, and the talks perhaps that Honda, Nissan are looking to merge. Mitsubishi could also be added into the mix, so we're talking about sort of a moat, a competitive moat. That's what our Bloomberg intelligence team is saying, that could be formed to sort of counter Toyota. But we want to get the reaction. I bring in Joanna Shen. She's emerging markets and Asia Pacific equities investment strategist specialist rather at JPMorgan Asset Management. So you are underweight on the Japanese automakers, and you're talking about the potential of U.S. tariffs. Is that sort of the primary concern for you in this story?
It is definitely one of the concerns, but there are also other concerns. Number one is the global competitiveness of the Japanese automakers. Number two, of course, U.S. tariff will pose headwinds for the Japanese automakers. And number three, if we look at valuation, Japanese automakers, they're not particularly cheap compared to the global peers. And last year we see their share price sort of rallied. That's mainly on the weak Japanese yen. In a way, they are over-earned this year. So that's all these reasons combined led us to an underweight in Japanese autos.
You do like, not so much in the autos, you do like Japan as a market in terms of stock picking. Tell us why to begin in that market.
Japan is the fantastic market for stock pickers. If you look at the underlying earnings growth in Japanese market over the last 20 years, you will be surprised. Actually, the EPS growth of top picks is almost the same as S&P 500. The reason why...
You wouldn't think that.
Yeah, you never know, right? Although we all know the macro kind of economic data is quite lackluster.
Yeah.
And also we do see a few things going on in the Japanese equity market. Number one is on the wage growth, the return of inflation. So that has been evidenced by the Shinto wage negotiation this year and last year. Number two is also the return of the capex, especially the semi-related capex. And number three, what we think more structural is the corporate governance reform, which is definitely gathering momentum this year. So we see in Japan there's this record share buyback. Actually, Japan now is trailing behind U.S. as the world's number 2 biggest market for active investment. So this year we have seen a record of $6.6 billion activist investment in Japan alone. And we have seen, as you've mentioned, this marriage between Honda and Nissan in terms of the corporate and M&A scenes. It's also very vibrant. So we see the convenience store, we see the entertainment companies, we also see some of the financial advisor sort of companies. So in a way, for us, it's chapter 2 of the Japanese corporate reform. So last year, what we see is the cheaper valued banks, steel companies, these cyclical names, they have been rallied on the back of valuation re-rating. But this year, the story is getting better. We see this corporate governance reform asking companies to improve their capital efficiency and profitability.
Oh, well, that's very optimistic then, the outlook for Japan. What about other markets then? Because India, for instance, has stood out as one of the key ones to watch in 2024. Where are the sort of major markets to watch for next year, especially in the face of what is setting up to be another very strong year for US equities?
Yeah, I actually was just in Shanghai seeing clients. US equity is the talk of the town.
Yeah, they're still asking about NVIDIA, aren't they? Anyway, please continue.
But to us, we do not think U.S. exceptionalism should be at the cost of the Asian equity in 2025. If we look at Asian markets, there's actually a variety of different betas. On the one hand, we have the likes of China, India, Indonesia. They're more domestic-oriented. On the other hand, you have the likes of export-driven Northern Asian countries, markets, that will benefit from the AI supply chain boom. So if we look at the divergence between the Asian markets over the last 3 years, you will be surprised. The best performing market actually is returning 18% higher on an annualized basis than the bottom markets. So I know there's lots of concern about China, but really the punchline here is Asian equity doesn't just mean Chinese equity. You have to be selective within Asian equity. You have the likes of thematic, secular, structural, policy-driven themes going on there.
I mean, that's a very good distinction because it's quite a dispersion in performance we're seeing in the Asia Pacific. I need to ask you, since you mentioned thematics, AI and the AI supply chain, how does that trade look next year? What does an AI trade constitute from an Asia context?
Right. We do think the AI theme is very strong. If we look at the top 4 U.S. CSP, the cloud service providers, their CAPEX for 2025 is actually trending $250 billion US dollar for 2025, up from $200 billion this year. And this is 10 times more than 10 years ago. Obviously, Asia is home for the picks and shovels for the Asia semi-supply chain. If we take one step back, in Japan is very strong in the semiconductor upstream, the likes of materials, equipment. And if we take a look at Korea, they're very strong in the memory space, especially HBM related chips. Then there's this critical player, Taiwan. They are instrumental. As Jensen said, Taiwan is at the epicenter for AI. So you have the likes of foundry, you have the likes of cooling system, the AI servers. So it is fantastic opportunities.
Well, what's not expensive in your view among all those stories? What's better value proposition?
In terms of better value proposition, actually ASEAN is a market within Asia which is under-owned, unloved, and misunderstood. So if you look at the valuation of ASEAN markets, forward PE is around 13 times, which is below the Asian average of around 14 times, 15 times. U.S. equity is trading at 21 times. And also, if you look at the economic fundamentals for ASEAN markets, they are actually coming a long way compared to the taper tantrum. Their current account balance actually has been improving. The currency, we didn't see much sort of headwinds last year despite the U.S. rate hiking cycle. And thematically or secularly, there are investment opportunities. For example, data center. Malaysia is set to benefit from that. The data center in Malaysia will grow by 5 times in the next 5 years. And financial penetration. 3 out of 4 people in Indonesia, they're underbanked. and also talking about trade, right? FDI to ASEAN is around 17% in terms of global share.
There are two headwinds, though, that face ASEAN in particular. Number one is the trading relationship with China. These are major trade partners, and if China's not doing well, it also affects them. And you've got the tariff risk from the US. So can it withstand both of those factors?
Yeah, these are valid concerns, Anna. But if we take one step back, in terms of the tariff, although the tariff is the most beautiful word in Trump's dictionary, but we have to see that actually tariff, they will not reduce global trade. They will redirect global trade. So what we have seen for the likes of Chinese companies is since 2018, they are sort of diversify their manufacturing facility to ASEAN, to Mexico, to kind of circumvent and be proactively prepare for the upcoming tariff risk. So I think in terms of the ASEAN market, for sure, Trump seems to be more focused on countries that have more trade surplus with them. If you look at countries like Vietnam, in terms of trade surplus, it's actually quite high on the list. But we do think, on balance, U.S. or Trump administration, they have to be cognizant of the impact or the inflationary impact if they impose too high tariff, which ultimately will be bad for the consumer confidence.
Yeah, in fact, I'm glad you brought it up. Remember we were having this conversation yesterday with McKinsey, right? And McKinsey basically said that if Mexico and Canada are worried about being seen as the gateway through which Chinese goods are entering the U.S., Vietnam might have a similar problem, right? We're not there yet, but just to think about that. Sorry, I digress. You mentioned you were in Shanghai, and I'm wondering, going into next year, are there investment ideas that when you discuss with clients, they don't seem to be too receptive to? Where are you seeing pushback?
I think China is one area which client has yet to build up more conviction on. But in our perspective, what is really positive is the policy pivot from the Chinese government this Monday. So what we see is the Chinese government, they have finally recognized the economic situation is challenging. They have recognized that they have to put their act together to have more coordinated policy response. They have also recognized that they need to have a more consumer-centric approach. So the pivot towards a more expansionary fiscal policy as well as moderately, loosely monetary policy, these are very important pivot to us. But the thing is, the direction is set. The investors, they need a bit more patience because from now to next March, it is a window of policy vacancy in a way. So all eyes will be on how the policy will be in terms of the fiscal deficit, the monetary policy side. But nonetheless, we think the direction is set. So it's all more about the execution next year.
Okay, yeah. Well, sit back, sit tight. It's the holidays, right? Have some bubbly, have some tea, have some coffee, whatever it is. Joanna, thank you so much. Have a happy holidays ahead. Joanna Shen, EM and Asia Pacific Equities Investment Specialist at JPMorgan Asset Management. Just ahead, and speaking of bubble,
I knew where you were going with that.
Why don't you read the teas for us?
Well, bubble tea makers could be reviving their IPO plans. We're going to look at China's softening stance. There actually has been one bubble tea listing this year in Hong Kong that I do want to ask about. That's Chabadao. And actually, it's down nearly 40% since its IPO. But anyway, we're going to have more details ahead. This is Bloomberg.
Welcome back. You're watching The China Show. Let's talk about the IPO market, the outlook for next year, what's worked, what's stalled, given these various themes here. So you really have signs, of course, that Beijing is loosening the grip on the market. Let's bring in Julia Fioretti, our equity capital markets reporter, to talk us through this. Let's start with, bubble tea. There was a very big name, of course, that listed this year. Hasn't done quite well. Some of the other ones have actually stalled. Just help us understand the situation here.
Yeah, so basically, Chabadao listed in April and it didn't do well, as you said. It fell 27% in its first day.
And there were a number of other companies, or there are a number of other companies that are also looking to list, the biggest of which is Mishue, but there's also Guming and Auntie Jenny. And all these filed their applications with the Hong Kong Stock Exchange around the beginning of the year. But then the CSRC approvals were not forthcoming. And so the applications lapsed, and there was basically an impression that the CSRC was not very favourable towards this sector. Partly it may have been because of the dismal performance of Cha Bai Dao, but there may have been other factors at play. So all the applications lapsed. And now what has changed is that Guming recently got its CSRC approval. So that's being taken as a sign that there may be some sort of relaxation. It's not a guarantee that the others will get it, but it's certainly a step in the right direction for the companies.
And so does that sort of give us a signal for other consumer-facing companies that maybe they also get greenlit as well?
That's certainly what people are hoping. I mean, there's various different kinds of consumer companies, obviously, but in terms of the beverage companies, that was seen, and the tea especially, that was seen as not getting much sway with the CSRC. We reported previously that the CSRC had said that companies that rely on fast expanding franchise models, as many of these tea chains do, were not able to list locally, and so maybe that had an effect also on the offshore listings. So there's a little bit more optimism now that this may be a sign that things have changed, and the attitude is changing and softening.
I mean, it does, to be fair, feel that way the last few months and going into next year, looking into pipelines. So what does next year look like?
Next year's looking better than this year, which I guess is what people said last year as well.
Yeah.
So that doesn't necessarily say much. But yes, definitely there seems to be a bit of a turning point. People are a little bit more optimistic. A lot of people are relying on the A to H listing, so companies already traded on Chinese exchanges, listing in Hong Kong as they're easier to do. There's already a valuation benchmark. And there's quite a few of those large ones in the pipeline, so definitely people are expecting volumes to be better, and investor sentiment to continue improving, or at least maintain the current levels.
All right, that was our Asia Capital ECM reporter, basically, Julia Fioretti, joining us. And I think it really, if there's one area that sort of stood out as bearing the brunt of this, it's been the brokerages in Hong Kong. And now we're actually seeing that maybe there's dozens of them that are basically being forced to exit the market as a result of a lack of IPOs and basically slow trading activity. But let's get more on that now, bring in our China correspondent, Min Min Lo. So bring us up to speed with the report.
Yeah, as you said, it's been a really hard few years for the brokerages. It's the third consecutive year that we're seeing many of these brokerages go out of business. So 37 of them closing down this year, although there are 6 that are resuming trading after a hiatus. And it's really a number of different factors at play. That there is the lackluster economy in China, really since the pandemic. And then you have Beijing's crackdown in the private sector that is weighing on business confidence, plus some of the macro factors, Trump's tariff policies, Beijing's stimulus measures, and then you have the regulatory reforms, the IPO reforms, that is really cutting into the margins, the financial fees that these brokerages can charge. So overall, yes, profits for the entire sector is up, but it's really eaten up by the big companies, because you have 3% of the market share being split among over 500 companies. So industry players, the Hong Kong Securities Association told us that despite the pickup in trading activity this year, they are expecting to see more of these companies close down in the next 2-3 years, and we might end up with a market where you have just the big dominant players left.
Min Min, thank you so much. Min Min Lo, our China correspondent there. You can get more on the Hong Kong story on Insider's Guide to the Money and People Shaking Up the Finance Hub, the Hong Kong edition newsletter. The next one is due tomorrow, so it's out every Thursday. On that link, bottom of your screens, check it out for our clients, and also, of course, if you have an internet connection, I think you have access to this too. Plenty more ahead. This is Bloomberg.
Some of the major geopolitical stories that we're following today, and Israeli officials say a ceasefire in Gaza is more likely now than at any time in the past year. A working group from Israel is in Doha this week to re-establish relations with mediators. 2 officials told Bloomberg the proposed deal would come in stages, starting with the release of some hostages and Palestinian prisoners. A ceasefire would then follow to allow aid into Gaza and talks on a permanent truce. And we will be speaking with the US Secretary of State Antony Blinken about those developments in the Middle East and as well as Ukraine, plus what foreign policy might look like in a second Trump administration. You can catch that interview live on the time set that you can see on your screen. The US as well is said to be gearing up to initiate a trade investigation into Chinese semiconductors in the coming days. Sources say the review could result in tariffs or other measures to restrict imports on older model chips and the products containing them, such as cars and smartphones. The investigation could take months to conclude, with any reaction left to Donald Trump's incoming administration. And actually, chip stocks in China are sort of one of the key areas that we're watching in the session today. And I find this story really fascinating because we've had so much of a focus on advanced chip-making technology and the restrictions on place to try and curb China's advancements. But legacy technology has kind of been left to the side. We did see that investment ban or at least question marks over what kind of investment could come from the US into legacy chip technology in China about a month back, but now it does seem to be ramping up a little bit. And the concern here is basically if you allow China to continue unencumbered in producing that legacy chip technology, it could actually end up denting major chip makers in the space as well in other key markets.
I mean, that really underscores just the enormous task to plug the holes, right? You know, from the perspective of the U.S., for example, right? Whether it's cutting edge all the way down the spectrum.
Well, it ends up being a complete decoupling, you know, that you don't, if you don't even want to have legacy chips that are coming from China, and they're ones, as we said, they're used in cars or in consumer electronics. I mean, kind of where do you end, I guess?
Well, I mean, good luck then selling the idea of small yard high fence, right? Because it broadens it out as well. There is this, well, somewhat related, of course, within the sector. There is this debut, of course.
Kioxia is listing. We've got that ceremony coming up in Tokyo at the top of the next hour. We have seen that stock coming online today. It does actually face some of those similar challenges. This is a big player in the NAND space, NAND memory. We haven't really seen prices recovering just yet. It does face those competitive pressures as well, plus the concerns around Trump tariffs. It's an IPO or a listing that's really been years in the making for this company.
Now, just to pivot very quickly, President Xi Jinping was, or maybe still is, in Sanya. Of course, he visited the city on Tuesday. That is, of course, within the Hainan province. And speaking of the Hainan-related stocks, on your screens very shortly. There we go. And today he comes out. He'll be coming to Macau, of course, on this. If you think about it, there's this tour of the South, if you will. More on that later on, and we're talking gold as well with Standard Chartered.
Welcome back to the China Show. Taking a look at live picture there of Shanghai, but also how Chinese equities are faring half an hour into the session this morning. And actually, we're seeing upside that's coming through, particularly notable in the H-shares gauge, but also Hang Seng tech stocks. Those are looking higher as well, Dave.
And I think we are getting a reversal of what we've seen in recent days, where it's really been tech that's really been pounded the most. I think when you look at the HS Tech Index, it was down a lot more than the other benchmarks. Where you are also getting somewhat of weakness coming through today is in the likes of the Shenzhen Composite, for example, and the Chinex Index, which did very well up until recently. So maybe there's a rotation taking place?
Maybe. I mean, also you've had, I guess, thinking about sort of the tech space and what's the heaviest weightings in that, and that is Meituan, for instance. And we did have those bad retail sales out, not great signs of consumer confidence in China, dented the appeal of some of those names, and a reversal of sorts.
You've been making this point, and I think our viewers, this is important for our viewers too. Like, if you had to pick, and obviously this is in hindsight, if you had to pick the number one consumer stock in China this year, very few would have picked Xiaomi, for example.
I knew you were going to say Xiaomi.
Right? And then they would have picked Meituan. It would have been your Alibaba. It would have been even PDD, for example, which has run into some issues recently. But we did a story on Bloomberg. It's up at 100% this year.
I think they're calling it the dark horse. But I think when you look at Xiaomi as a company, okay, so they've got the EVs. They've come out. EVs are selling well. They are producing for the local market in China, so they're not really that tariff risk, maybe just yet. Their smartphone sales are doing well. They're taking that premiumization play as well, so they're really trying to target those more expensive devices. And it's also their sort of devices play as well, the IoT segment. And what they want is to have your house and your car and your phone, and they want that whole ecosystem.
Yeah.
And some people are buying the story.
Yeah, no, I mean, certainly. And they're dominating that, right? And who would have thought they would have come out with a car, and they did. And that takes us, well, interestingly, nicely into the big story today, which is really on cars and what's driving these markets. 0.4 of 1%. There's a lot of central bank decisions. We'll get to that a bit later on. And apart from the car story and the macro story, there's also, of course, the this big listing ceremony, I believe, in
Tokyo.
In Tokyo, yeah. You feel very strongly about this too.
Well, yeah, I guess I feel strongly about a few things, and that definitely comes across. But
suffice to say,
Kioxia is one of them. So this is a listing that has been years in the making. We've got that listing ceremony that's just taking place this morning in Tokyo. Kioxia is a major player in the NAND space, so NAND memory, and the amount that they raised in this is actually a far cry from where they looked to raise just a couple of years ago and what was being led by Bain. But essentially, this stock, again, in that NAND memory space, we haven't seen prices recovering really just yet. They're still mired in that slump. You've got that tariff risk. You've got the risk from China as well, given that they also have major players in this same segment. But still, actually, upside today for this company as it comes online.
Yeah, well, it's the first day, so the week is young.
Okay.
But I think to the point you were making too, like on the memory chip story and the turning of the cycle. It's really one of the big reasons, and politics aside, it's one of the big reasons Taiwan and Korea have gone the opposite directions as far as markets go this year.
Yes, that's right. I mean, it's that concern that, China's falling behind in the AI race. Taiwan, of course, is just controlling more and more of the ecosystem. But just to talk about the valuation for this firm, at the listing, it was valued at $5.3 billion. And that's, again, a fraction of what it was just a couple of years ago, $18 billion.
Yeah.
So, I mean, you're talking about roughly a third of the original ideal size for the listing. But anyway, automakers, of course, the other major focus today. And again, sort of those same competitive pressures that are in play. You've got the tariff risk from the US, of course, but also, I mean, China and that just unassailable lead they've built in automakers generally, and not just in that Chinese market, but also China now looking to the global south for the play there. And that's a market that was once dominated by the Japanese names.
It was. In fact, I grew up in Southeast Asia, right? And really, everywhere you looked was a Japanese car. And I think it still is really in most parts. But I guess to the point that you just made there, how quickly times can change. We're looking at now, well, if not already, 200 million shares of Nissan already traded on Wednesday. I think this could actually be the early innings of an almost Avengers Assemble moment for the Japanese car makers to take on, of course, the global dominance that we're seeing from the likes of one of their peers and elsewhere. We have spoken to a few people this morning on the back of this news. Let's take a listen to what they had to say so far.
For Honda's perspective, the biggest benefit is actually the scale. I mean, currently, under the current management, Honda has been chasing some of the collaboration. And the biggest scale, clearly the GM partnership is one of them. They've been working with the Sony recently on Afrila brand. That there has been clear change on the company's the management on focus on the scale and the operation. I guess that's what Honda is expecting to gain from this partnership.
There are also other concerns. Number one is the global competitiveness of the Japanese automakers. Number two, of course, U.S. tariff will pose headwinds for the Japanese automakers. And number three, if we look at valuation, Japanese automakers, they're not particularly cheap compared to the global peers. And last year, we see their share price sort of rally. That's mainly on the weak Japanese yen. In a way, they are over-earned this year. So that's all these reasons combined led us to an underweight in Japanese autos.
All right, let's get more on this story now with our Bloomberg transport reporter Nicholas Takahashi joining us from Tokyo this morning. And Nicholas, it does seem like the rationale is there, and we can see really why this benefits some of the automakers in Japan. But are we really talking about a fait accompli?
Well, I think the way you just put it now about the Avengers assembling is a good way to put it. Perhaps this is sort of a DC Avengers collision situation starting to unfold. What we know so far is that Honda is considering a partnership of some kind with Nissan, whether that's a capital tie-up, a merger, or possibly a holding company. We're still covering that story as it unfolds. as you said, Japanese car makers are struggling in North America and China, particularly on hybrids in North America and with EVs in China. Honda and Nissan had already been developing this partnership to develop software this year, and that would greatly help it reduce R&D costs. And like James Hong from Macquarie said, Honda's greatest benefit might be of scale. So as we see this sort of dichotomy open up between Honda, Nissan, and Mitsubishi, and then Toyota and friends, I think watching this unfold will be really interesting.
How long might this take?
It's not clear what the timing is going to look like. Like I said, Honda and Nissan have been finalizing this alliance on tech development throughout this year. They first announced the partnership in March, and then later in August that Mitsubishi would be part of that development. Whether this complicates that partnership or extrapolates from it, we have yet to confirm those facts.
Okay, Nicholas, just very quickly here, how receptive is the Japanese public? I know talks have been around for months. Is the Japanese public and maybe also Japanese regulators to some sort of tie-up? Let's put it that way.
Well, like you said, there's been talk of a Honda-Nissan tie-up for some years now. And if anything, Nissan's recent financial crisis with cratering profits in the U.S. and China, forcing it to cut jobs, slash production, and its annual profit forecast, definitely heightened speculation about that. And there's separate speculation that the government would be very happy about a Honda-Nissan tie-up. So to answer your question, I think that the public reception is neither negative nor positive. I think for the government's side, if this helps Nissan survive as a company and as a major employer, that would benefit everybody.
Fantastic. Nicholas Takahashi, our transport reporter in Tokyo for us. Now, and staying in Japan here, back to Chipmaker that is making its debut, of course, in Tokyo today. We are looking at live pictures. I believe they have yet to ring the bell, but that being said, of course, we're already seeing shares trade there. It is taking place as we wrap up this calendar year. Still a big milestone, of course, there in Tokyo. Let's bring in our Bloomberg Intelligence Tech senior analyst, Masahiro Wakasugi, in Tokyo for us to talk us through this. And Masahiro, let's start with the basics. How do investors look at this company, and what are the major differences between, we tend to dump memory chip makers into one bucket. The major differences there.
Yes. So Kioxia is a pure supplier of the NAND flash memory and solid state drive SSD. And if we look at the Samsung and SK Hynix Micron, they supply both DRAM and NAND flash memory. So that's a major difference. And at this point, we think that the DRAM makers are benefiting from the strong AI demand. So if we look at the Kioxia, people may think that their benefit from the AI demand might be a little bit smaller compared with some peers, including Samsung and SK Hynix and Micron. That's a major difference among these suppliers.
There have been sort of some concerns about the pricing, for instance, that we're seeing for NAND memory at the moment and still might in that slump, and also sort of the competitive pressures facing the company, particularly from US tariffs and the potential for those. But what's the outlook for Kioxia?
So if we look at the NAND flash memory market, yes, it might be true that the demand for DRAM is stronger than NAND flash memory because NVIDIA GPU or AMD GPU that are used for AI. These GPUs require high bandwidth memory, which is one of the DRAMs. But of course, NAND flash memory is used for the enterprise SSD or high-end server DRAM for AI functionality. But demand might be a little bit smaller. So this kind of environment might continue going forward. So the key point in maybe 2025 would be the recovery pace of smartphones or PCs or general servers. And these applications will also require quite a lot of NAND flash memory. But if we look at the smartphone demand at this point, it's not bad, but it's kind of muted. So the key point for Kioxia's business going forward would be whether the demand for smartphones or normal PCs or maybe general servers will recover or not. We had a good demand in 2020 because of the COVID and the work from home environment. So people bought quite a lot of PCs or smartphones at that time. So we may have replacement cycles in 2025. So that would be the key point going forward, I think.
Masahiro, I'm curious about the report that we have today that the Biden administration could be looking at a trade investigation into Chinese semiconductor technology in the coming days. And this is really targeting legacy technology. Does that sort of investigation and the chance for that, can that actually benefit names like Kioxia?
We don't see the actual impact at this point. So we have to look at the contents or the details of the potential regulations. But at this point, what we saw about chip making equipment is like we saw additional equipment export restrictions. But the actual additional part was pretty much limited. And if we look at the current regulation on NAND flash memory, it's already prohibited. I mean, to 128 layer NAND flash memory would be the threshold. And already this is happening at this point. So if we see very strict regulation going forward, that might have impact. But so far, the impact might be pretty much at the same as what we are seeing so far.
That was our Bloomberg Intelligence senior analyst Masahiro Wakasugi there in Tokyo. Thanks very much for those insights, and actually a very busy start to the hour, really, because we've also been
yes.
13 minutes into it. But we have actually been hearing from South Korea's foreign minister and really about the impeachment proceedings and how that actually could be posing a constraint to Korea's ties with the US. So that's sort of an admission, I guess, or a comment statement that we're getting from South Korea's foreign minister. South Korea also says that it's ready for the possibility of US dialogue with North Korea. We know, of course, that President-elect Trump has often reflected on his relationship with Kim Jong-un in North Korea, and also that they're looking to maintain robust security posture with the US as well. So just some of the lines dropping this morning from South Korea's foreign minister. Right.
Okay, lots to. I'm just trying to wrap my head around all the stories coming through today, and we haven't even talked about the Fed. Imagine that. Coming up here on the China Show, and speaking of not talking about the Fed, we're talking gold with Standard Chartered Bank and their outlook for really one of the best performing assets this year so far. And they're bullish on gold, suffice to say. Suki Cooper joins us at those times on your screens. Plenty more ahead. This is the China Show.
Wednesday, the Fed decides.
The consensus seems to be that you need a beat on payrolls, an upside surprise on CPI, and the Federal Reserve will hit pause.
Yeah, but it's pretty high bar.
All this seems very predictable.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
People feel good about where the economy is. Demand is obviously pretty strong.
If there were black clouds on the horizon, what would they be?
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
Welcome back. So the Fed is coming up, as we just showed you there. Certainly the FX markets have reflected that via a strong dollar, and the opposite of that is the Bloomberg Asia Dollar Index, which hit a 2-year low this week. Let's bring in Mark Cranfield in Singapore for us, our MLive strategist. And Mark, I got to wonder at these levels whether or not the market's betting too much right now. Is the betting too one-sided now in favor of a stronger dollar still?
Yeah, you might think that on the surface, but I mean, this is the meeting where the rubber really hits the road. Bill Dudley wrote a very good piece for Bloomberg at the end of last week, saying that Jerome Powell really now has to acknowledge the next Trump administration, that he can't dance around it any longer. There's been enough information. There's expectations that he will be enacting policies as soon as he sits down as president. And of course, with the tax cuts and the extension of tax cuts that are very likely to happen, there will be an inflationary aspect to that. And they can't put their head in the sand. They have to acknowledge that that is an upside risk to inflation for 2025. So we have the dot plots to be revised. And currently, if you look at the longest end of the dot plot, some of those are actually below 3%. Well, that scenario really doesn't look as though it can exist any longer, considering what they're going to have to readjust their own outlook. The Fed are going to have to reconsider where they see the growth numbers and the inflation numbers going into next year. This is not an economy that needs any more tax cuts. The American economy is doing very nicely, thank you very much, without that. So this clearly to central bankers who are meant to be very good economists, they will clearly weigh this up and they will have to have some thoughts about it. So they cannot dance around it any longer. And this is the meeting where they will have to address it, either through the statement or through the press conference or both. But you can clearly see what's happening is the positioning in the market. Traders are getting more nervous, especially in the bond market. And we've got another very good macro view today from Ben Ram, our colleague, saying that it's quite possible 10-year yields could go above 5%, because that is not priced in. The rising inflation scenario for the first half of next year is not priced into the market.
I'm looking at your column this morning, Mark. 3 strikes and out for China 8 shares. Talk us through that one.
Well, he's just coming at the wrong time. I mean, at this time of year is when people start thinking about, should I be taking money off the table, particularly if a market's had a good run. And because of the boost that Greater China markets had in September with all the different factors in terms of stimulus that was announced from China, some being enacted, some are still going through, the work that the PBOC did, the market had a great revival. And there's still money on the table for people that got involved in that. And you can see from the daily trading volumes and the amount of positioning that still plenty of people haven't taken the profits that they've had since that period. We're now getting close to the year end. The announcements last week in terms of what we saw for GDP expectations for fiscal deficits, they seem to be a little bit lower than what people generally are expecting. So not the boost that probably Chinese authorities were hoping for the market. So although you see a little bit of green on the screen today, that's within the context of markets which are really struggling over the past couple of weeks. So if you look at the technical picture as well, which traders will do if they're looking for excuses to start moving to the sidelines at this time of year, that will certainly come into the picture as well. And you can see that the rallies in the 8 shares have just been losing strength since the one that it peaked in October. They haven't been able to replicate that. So certainly from a short-term point of view, if you're thinking to yourself, yeah, I'm coming towards year end, do I want to put some money away to start next year on a cleaner slate? The excuses are all there. They're all coming into play. And unless we see a surprise in terms of the PBOC cutting rates by the end of this week, you would think that the markets are probably going to drift lower towards the end of the year.
Yeah, Mark, momentum is certainly coming off. I just had to look at technicals to your point. Yeah, we took out really up until recently some support levels on the Hang Seng Index and also the benchmarks, and now we're in fact substantially below those benchmarks, those levels. Mark, thank you so much. Mark Cranfield in Singapore for us at MLive strategist there. We will leave you, and from Singapore, we'll leave you with live pictures out of Japan, where we have this big listing, of course, this jumbo IPO. The price, 1455 yen, opened slightly below, and we're now trading slightly above that level of about 4%. Good first day at school. Plenty more ahead. This is Bloomberg.
Some of the major geopolitical stories that we're tracking this morning in the US is said to be gearing up to initiate a trade investigation into Chinese semiconductors in the coming days. Sources say the review could result in tariffs or other measures to restrict imports on older model chips and the products containing them, like cars and smartphones. The investigation could take months to conclude, with any reaction left to Donald Trump's incoming administration. Israeli officials say a ceasefire in Gaza is more likely now than at any time in the past year. A working group from Israel is in Doha this week to re-establish relations with mediators. Two officials told Bloomberg the proposed deal would come in stages, starting with the release of some hostages and Palestinian prisoners. A ceasefire would then follow to allow aid into Gaza and talks on a permanent truce. And we will be speaking with the US Secretary of State Antony Blinken about those developments in the Middle East, also the outlook for Ukraine and what foreign policy could look like, the shape it could take in a second Trump administration. So catch that interview live at the times you can see there on your screen. To Thailand now, and a son of Thailand's king says the monarchy needs to listen to all opinions about the institution's future. 43-year-old Vajrayason Vivacharewong returned to Thailand from exile in the US last year. In a sign, he may be considered a possible successor to King Maha Vajiralongkorn. Thailand's strict lèse majesté laws threaten lengthy jail sentences for anyone who criticises the monarch, while Vajrayason wouldn't comment directly on whether or how to change Article 112. In a rare interview, he told Bloomberg he believes in freedom of speech.
There's place for every opinion. If you don't listen to logic or to understanding or arguments of another side, I don't think you can really say you can reject that idea.
And Thailand's Bureau of the Royal Household did not respond to written questions from Bloomberg. Back to markets now. Going into the Japanese lunch break, about 4 minutes till we hit that. And certainly this is really the story that's taking Tokyo by storm today. And volumes are just exploding. So I think Nissan just took out 200 million in shares traded about half an hour back. I wouldn't be surprised if that's even more right now. So Honda's taking a bit of a pullback right now. Nissan and Mitsubishi. And the third one, of course, might be part of the story. Very quickly, let's have a look at the listing in Tokyo and, of course, some of the chip stocks in focus as well. And we'll leave you with a look at we'll leave you with a look at this. Why not? This is Bloomberg.
It's 11:29 a.m. in Tokyo. Japanese markets just about to go into their lunch break, and actually probably some are just relief, just to take an hour off what's been happening in terms a manic start to the morning. And I think to what you were saying earlier, it's pretty crazy that it takes us 15 minutes to get into the Fed and also to what's happening in Chinese markets. And that really just points to not a lack of editorial expertise, that we're really focusing on what is the top story today, and that is definitely this talk of a merger between Nissan and Honda, maybe Mitsubishi.
And finally, it's become so there were talks about something potential for years, and I think the news flow really overnight from the Nikkei report and the stock getting suspended, and then now the comments from the companies really bringing this to really front and center. And I think as you flip the boards, please have a look at the Asia Pacific. This, weirdly enough, reminded me, I was thinking this silently, but I'll say it now, earlier on, that this is really the main difference I feel between financial media and entertainment media, where we actually get excited and celebrate potential mergers and marriage, where the opposite is actually get excited about divorces. If you think about it.
Look, you can get excited about both. We excited. I don't know about that.
Sorry, that's a bit random, but yeah.
Okay, all right. Well, anyway, in terms of what we're seeing in the markets today, actually, I was just taking a look at the WVM function that looks at trading volumes, and there's only really one market that's moving above where we'd be on a typical 3-week basis, and that is Tokyo today. Everything else is significantly less trading activity, and I think that just points to the amount of sort of event risk on the horizon, not least, of course, the Fed later today.
Yeah, central banks. You have the Fed, you have the BOJ, you have Taiwan, you have LPRs out of China, you have a few in Southeast Asia, you have Thailand, the Philippines, and Indonesia. In fact, let's get more on those two stories out of Southeast Asia. You have Indonesia and Thailand later today with those rate decisions, Bank Indonesia, of course, and what to expect there. Let's bring in Claire Zhao in Tokyo. See, it's still dominating my head. Get it out of my head. In Jakarta for us. Good morning, Claire. Nice to see you. What can we expect from that rate decision in your hood today?
So we're still expecting a slim majority of economists are seeing that the key rate will be held at 6% at this meeting. And the story is really all about the rupiah. It's recently breached that key level of 16,000 against the dollar. Along with other emerging market currencies, it's really been battered by all these risks about the Trump tariff threats and the geopolitical tensions in the Middle East. And those things aren't going away anytime soon. Those factors will be weighing on the minds of policymakers today, even if the Federal Reserve is likely to cut later on. So what we're expecting is they'll be cautious and they'll hold the rate at 6%. Of course, that comes with trade-offs. Indonesia is grappling with slowing economic growth. GDP growth is already at a one-year low. And consumer spending is also softening. We have a value-added tax hike that's set to come in next year, and that should weaken consumer sentiment further. However, for the central bank, the primary mandate is currency stability, and the next level they'll likely be watching is that 16,500 against the dollar, which is the lowest since June. They did intervene quite a bit to keep that 16,000, and they still maintain that the value of the rupiah, the fundamentals, mean that it should be much stronger than that level.
Okay, so 16,500 against the US dollar. That's the level to watch for the rupiah. It's also coming at a time where we've got a corruption investigation that maybe could have a bearing on the meeting today as well.
Yeah, so a cloud is really hanging over Bank Indonesia ahead of this pivotal rate decision, and that isn't going to bode well for the rupiah either. What we know so far is that the anti-corruption body is investigating a broad number of government agencies, including the central bank, about the use of CSR funds in 2023. It upped the ante on Monday evening by searching the headquarters of the central bank, and we know that among the offices searched was the office of the governor. That being said, we still don't know what kind of evidence they're looking for, what involvement central bank officials do have here. It could just be that they're looking for supporting information to help with their investigation. What the anti-corruption body has said so far is that they may summon these central bank officials for more questioning. They have identified some suspects, but they have provided no details about whether these are private sector or public sector individuals and what institutions they're affiliated with. What we will be waiting for later with the central bank meeting is whether the governor will speak about this. Likely he will toe the same line, which is that the central bank is cooperating with any government investigation and that any use of CSR funds by the central bank has always followed a strict system of procedures and provisions.
That was Bloomberg's Claire Qiao there in Jakarta. And let's shift to what else is obviously very sensitive to the direction of central bank policy, and that's gold, of course. Typically benefits as you do ease rates. But this is taking a look at the moves we've seen pretty much range-bound, you'd say, over the past 5 days. But actually, if you were to take a look at the moves so far this year, it's a jump of nearly 30%. So let's get more on the outlook now for that precious metal. Bring in Suki Cooper. She is a precious metals analyst joining us this morning from Standard Chartered Bank. And Suki, thinking about the sort of factors that have underpinned the strength in gold prices this year, you've got obviously the support from monetary easing in the US. You've had safe haven demand. There's been buying from the world central banks. We saw the PBOC recently dipping back in. Do those sort of metrics or supportive factors stay in place for 2025, do you think?
I think a number of those factors are still going to be very important going into 2025. We've seen that the downside has been very well supported. Even when we've seen prices rallying to record highs, we haven't seen the physical market crumbling under the pressure of record prices. In fact, that downside continued to be well supported. Even in November, we had record gold imports into India as well. So we think going into 2025, the Fed policy will continue to be important in driving that upside momentum, and that marginal increase is likely to come from investors continuing to want to have an exposure to gold, especially if the opportunity cost of holding gold is falling. But we also think that those key factors that you've mentioned around central bank demand will likely soften relative to the record levels that we saw last year and 2022, but still remain elevated. But we think that the key factor that will change going into 2025 is likely to be ETF buying. ETF buying has been quite soft in the past few months. We saw a little bit of an uptick in December, but overall flows are negative for 2024. But as the Fed starts to cut rates on a more regular basis, we think that's when some of these macro-led, longer-term resilient buyers in the market will come back in and help to drive that extra momentum for gold prices.
Suki, David here, if you could talk a little bit more about, that ETF angle, and wonder if you could distinguish, are those gold tracker ETFs, for example, what would lead to buying? Because that seems to be potentially a new driver, which could, to your point, drive prices even higher from here.
If we look at the investment space for gold, we've had three different responses. If we look at the tactical investors, they've been very quick to increase positioning in the gold market. And that positioning has risen on the back of geopolitical risks and back of market uncertainty. But if we look at retail demand, that's actually been relatively lackluster. But also ETF buying, which is typically where we tend to see the more significant volumes, and they tend to be much more longer term investors in the space. They haven't really started buying on a meaningful basis. We had 5 months of ETF inflows in around about 100 tons, but for the year as a whole, we have started off on a negative note, and that turned negative quickly as the market priced in the implications of a second Trump administration. So those ETF holders tend to be some of those longer term buyers, but we've also noticed that they're not necessarily following the physical market, so looking at where India's demand is or China's demand or what central bank demand is doing. It tends to really follow the macro drivers, so the dollar and real yields. And as that relationship has weakened, we've seen that correlation falling to around about 20% this year. Those investors haven't necessarily come back into the space. But going into 2025, we think that the Fed rate cuts will become much more of a focal point for the gold market, and that's when those buyers will return.
Dollar strength, though, could persist at least in the near term ahead of President-elect Trump's inauguration, for instance, in January. So how does that also impact your outlook for other metals that you cover? And I'm thinking here about silver and also platinum.
Certainly, dollar strength has capped that upside risk for much of the complex, and we've seen prices coming under pressure. But we think that going forward into 2025, the outlook is quite mixed for silver and platinum and palladium. On the one hand, there's concerns that we could see a slowdown in demand overall, potentially a slowdown in China's demand, and that could hamper some of the demand growth that we've seen for silver, platinum, and palladium. But on the other hand, if we see some initiatives such as battery electric vehicle growth slowing down or not being as fast as it was last year, that could mean growth of internal combustion engines, which in turn supports catalyst demand for platinum and palladium. But overall, we think that we're still going to see continued growth for all three of these metals, but it's likely to be a much more choppy and much more volatile outlook for the complex. In the near term, we think that dollar strength might have to help to cap some of that upside risk. But we think that underlying, we're still going to see moderate growth. We expect a very similar growth to 2024 going into 2025 on a global basis. And we think that should still continue to support some of the balance deficits that we've seen across the space. We continue to expect an undersupplied market in silver, although that's not a key driver for the silver market. The macro backdrop is important too. But we also expect an undersupplied market for both platinum and palladium. And we think that will help to support some of the downside pressure that these metals might come under.
Suki, it's hard to top the year we've had, and just back to gold here. And I'm wondering, it might sound simplistic, what is the risk to the bullish view right now? What are we not seeing?
If we're going into the first half of 2025, we think that we're going to see more of the upside risk materializing at that point. We think we're likely to see more of the rate cuts materializing in the first half of the year, and that's likely to drive gold and silver prices higher. But if we look at what's driven the gold market, it's been a cocktail of factors. It hasn't been a single factor that has helped that upside risk. So we think that a number of those, if one of them starts to weaken, then yes, we could see some moderation in prices. But I think the key risk that we potentially need to consider here is potentially if we don't see rate cuts materializing as fast a pace as the market as anticipating. That could mean rates remain higher and that upside risk for gold might come under pressure. If alternative assets start to look more appealing, then gold may come under pressure. But we still think that there's a sufficient number of uncertainty and number of underlying risks that continue to buoy some of that demand for the gold market. For the PGMs, for silver, I think the key question here really comes around demand. And on the supply side, we haven't seen significant supply cuts materializing across the platinum palladium space. And if they do materialize, then we could see even tighter markets. But recycling has been one factor that hasn't really picked up over the course of the past year, and that's a factor that could swing both silver and platinum and palladium markets. If recycling tends to pick up on a much more rapid base, that could be some downward pressure that we see across the industrially biased precious metals.
Suki Cooper, thank you so much. Let's speak again in the new year. A precious metals analyst at Standard Chartered Bank. Thank you for that. And of course, the various times, of course, we've had the conversation throughout the year. Just ahead here on shows with this period of making money, or easy money at least, from China seemingly over, we'll investigate really where investors should be looking for the next disruptors as mainland firms rush abroad. That story is up ahead. This is the China Show. Right, welcome back. So this is really, if not the best performing single index in China since the policy pivot. It's the Shenzhen Composite. It's, as you can see, it's really held up near the top compared to the others, which have really retraced a lot more. But recently the pullback, and the reason we're saying this is we're seeing a bit of a bounce today. We could be at risk, though, if the downside momentum continues, a break below this key support level for the first time since that policy pivot bell.
All right. Well, of course, part of the issues in the stock market have also been related to confidence around the property sector, and we've seen those ongoing efforts from officials really to try and stabilize the real estate sector. But even as Beijing tries to diffuse the housing slump, rescue efforts in the city of Zhengzhou do not seem to be spurring a rebound. Our senior editor Alan Wan is with us, and Alan, you travelled to Zhengzhou recently, but tell to us first, why is it so important with the Chinese government's efforts to end the crisis?
Well, Zhengzhou was hit hard by the mortgage boycotts a couple of years ago, so they decided to experiment with ways to sort of end the housing crisis alone, right? And one thing it did was try to reduce supply. So it went to a lot of these cash-strapped property developers and told them, hey, we'll buy a lot of your unsold units, over 100,000 over the past 2 years, and we'll buy them at a huge discount, and we will repurpose them as affordable housing. And you got to understand one thing about Zhengzhou is it's being targeted by the central government to become, if not a first-tier city along the lines of Shanghai, but maybe a mega city such as Chongqing. It's a major transport hub, such as Chicago in the U.S., and it's a capital of China's third biggest province. So what Zhengzhou is trying to do is become, a mega city, and it wants to try to lure young talent, and needs to create more housing and do a lot more construction. One thing we noticed too was it's trying to create like a financial hub, similar to what we're seeing here in Shanghai in Lujiazui.
Well, what did you see, Alan? Just help.
Well,
if you could be our eyes and ears on the ground.
Yeah. Well, we saw a lot of construction, not necessarily booming, but what we saw a lot of projects resuming construction after a lull, sometimes after a couple of years. So there was a lot of building going on, but not a lot of people buying. We went to like several showrooms, including one that's operated by Country Garden. Really cool looking showroom, sort of like Jetsons or even Mad Men. Not many people inside, but what struck us was right outside was a big sign saying we are, we are part of the government whitelist. That meaning that we're not going to run out of funds. The government is going to back us up in case we don't have enough money to build all these units that we already got money for and we pledge, but it has become like a long-standing problem across China.
So what else are you hearing then, Alan, on the ground? I mean, I'm sure you're speaking with analysts and economists. What are they saying about the housing crisis broadly?
Yeah, I mean, that has legs. It's going to continue to go on for the next several years. Some of the more bearish economists are saying that we have another 5 years before this crisis ends, just because there are tens of millions of units that are still unsold. In terms of solutions, a real hodgepodge of solutions. One economist is saying that what China ought to do is do what the U.S. did during the global financial crisis, come up with something similar to TARP, where the government buys up a lot of corporate assets and stocks. But in this case, instead of using money on that, use the money on the property market. Earlier this year, the IMF said that said something similar to this. The central government ought to give money to central governments, the local governments, so they can finish building up all these property units that they promised the people. But it comes at a huge cost. According to the IMF, it's going to shave at least 5.5% of GDP, and that's something that the Chinese government is unwilling to do right now, anyway.
Well, that was our senior editor, Alan Wan. They're really great reporting, and you can read more about Zhengzhou's housing struggles on the terminal if you're a subscriber or on Bloomberg.com. And you can also listen to it because this is the topic or the focus of today's Big Take Asia podcast. It's available on wherever you get your podcast fix. But it's a really nice segue, actually, into our next story because really the construction and the property sector underpinned China's breakneck economic speed for so long, and of course it really that era is largely over now, but it doesn't mean that there's not a way to make money. And actually we want to get our Bloomberg opinion columnist Shuli Ren joining us this morning because the title of your article is A Better Way to Make Billions from China. So how do you go about it?
Well, China is not going to stand alone. Like all these Chinese companies, they know there is so much deflation and fierce competition at home, right? And all of them want to go overseas to earn money where they see profit margins are much higher. So one way thinking forward about China is what Chinese companies are going to do to other corporations in the U.S. and in Europe. And unfortunately, they can be very disruptive forces.
I mean, we see that. And the news gods have blessed us with this auto story, right? That's, what the Chinese EVs have been up to in recent years, and look at where Nissan is. And so I guess the question there is everything from electric cars to apparel to, pick your industry. Do we need to look at the very top of that U.S. sort of list and be worried for the Magnificent Seven, for example?
I think Magnificent Seven, they are okay because they are magnificent for a reason. They are very good companies, right? But anything below that top tier, they need to be careful. I mean, what we have seen with Nissan and Japanese automakers, the Chinese EV makers, they're not only huge, they're also changing the consumer taste. So apparently for EV drivers, it's not just the horsepower, it's also the digital stuff like the drop-down screens, the voice controls. And then Japanese and the German automakers, they're just not very good at doing those things. So they really need to be careful. There are other examples. We talked about Luckin Coffee versus Starbucks before, right? Like Luckin obviously wants to go to the US because they think it's just amazing Americans are willing to pay $7 for a latte, whereas in China you can only charge $2. And this kind of companies also like, retailers, mid-range retailers like Macy's, Target, they're all, I think, a bit troubled. And we have seen discount dollar stores, they are very, very troubled, right? So a lot of the industries and the traditional business can very easily be disrupted by Chinese companies.
Shuli Ren, thank you so much, our Bloomberg opinion columnist. Some breaking news right now on that story, and wow. So this is according to TBS. Honda and Nissan are expected to make an announcement on Monday. That's December 23rd. We won't speculate beyond that. That's so far what's dropped on that story. But suffice to say, of course, this is a group of stocks we'll be tracking when Japanese markets reopen for the afternoon session in about 40 minutes from now. Plenty more ahead. This is Bloomberg.
We're just recapping a line that's crossed the terminal in the last few minutes. We've got Nikkei futures guiding to a weaker open. They are, of course, in their lunch break, but the key sector that we're tracking this morning is what's happening in the automakers. Honda, Nissan, they are expected to make an announcement on December 23. That's this coming Monday, according to TBS reporting. But what we understand is that they could officially announce their business integration talks, again, as early as Monday. That's the 23rd of December. That's the last trade that you saw for these stocks. Of course, as I said, they're in their lunch break right now, but very, very big move and possible restructuring in the domestic automobile industry. Of course, it's about creating a group of companies that compete against Japan or can compete against Japan's Toyota, but it's not just the Japan story as well.
Yeah, once they're able to solve the problem, then they need to compete with the Chinese automakers, right? And I think you have a similar situation, and I think it's not so much to the extent that we're getting a lot of the deals and mergers taking place. But you look at what's happening across the European complex this year alone, right? I mean, these two paths are converging, and really what the Japanese, I think, got a little bit ahead of it as far as that's concerned. Yeah, Belle, go ahead.
And actually, we had some reporting a couple of weeks back. So if you were to look at the car makers that have lost the most ground in China, VW is first, so that goes to the European auto story. Honda and Nissan, they're the next ones from the Japan side. So these are really the key players that are ceding ground to what is a huge amount of innovation that's coming through from mainland Chinese companies.
Yeah, there we go. Some of which are on the screens right now. Of course, some of the big automakers. We're getting some movement as well in the Korean automakers. Suffice to say, we'll have more on the story ahead here on Bloomberg TV.